SoFi has been on an incredible run for almost a month now, but it seems to have kind of lost its steam, and with some negative news coming out recently, and looking at short interest creeping up once again with SoFi, are we setting up for another big leg down? Or is there actually a squeeze possibility coming? So let's talk about what may trigger that squeeze, but you may not want it, so I'll explain why as well. So let's discuss all that right after you like the video if you like getting information like this and us kind of covering some topics that we don't normally cover, like short selling, like short interest in a stock. Now, I believe everyone can retire early and be financially free regardless of all the lies that you've been told out there. So if you want to take total control of your life, I'll show you the very real way to achieve financial freedom and retire early. Check out the pinned comment down there. That's what my new channel is all about, is basically getting you financially free and getting away, retiring early, just having freedom over your life. That's what it's all about. So check out the pinned comment down there if you want content about that specifically. So let's talk about the negative news first, and then we'll kind of talk about short selling and why you might not want a short squeeze in this particular scenario. So the negative news first. FINRA fines self-directed trading firms $2.6 million for poor oversight. Now, you can go read the release if you want, but I'm not going to bog this video down with all the legalese and all the other junk that's kind of involved in this particular, fine that's come across SoFi's desk. Essentially, as a lot of you guys know, and you may not know, you can agree to kind of have your shares lent out for other, other market makers, other folks kind of doing other things in the market there in exchange for a fee when you're using platforms, like SoFi. I think Robinhood does. There's a bunch of other ones that do it. Except it kind of appears that kind of SoFi kind of defaulted everybody to sign up for this particular program in the first place. And then secondarily, they didn't actually pay out the fee as promised. I'm not here to try to argue about whether they did or didn't do or what they didn't do. The point being, FINRA kind of found them guilty per se and sent a fine accordingly to them. This has actually been going on since 2019, so 4 years for SoFi. And over the course of those 4 years, they made a grand total of $8 million off this program. And to kind of, run it back a little bit more, just for a little bit context here, last quarter, they had more than $500 million in revenue. So, more than $2 million over the course of the year is what they're averaging if you take that $500 million in revenue there. So this is kind of a drop in the bucket, $2 million a year over the last 4 years. It's not really a lot of money, and this is not a big deal at all. I agree, they shouldn't have done it, but this was very, very minor in relation to the way it's kind of been spun and, oh my gosh, they're fraudulent and all this other stuff like that. It really didn't contribute to a whole lot in the bottom line. It was probably some sort of a oversight, or there was something else that went on. That's what they were actually fined for, was lack of oversight. So that's much more the case than anything else. So to me, this is a big nothing burger. No big deal here. But of course, traders are going to be traders, and they're going to just use any excuse, any reason to trade the stock down. And this is just kind of why I hate trading, why I don't do trading in the first place, and why I don't pay a lot of attention to it. And it's also why you see that short interest starting to build up again. So let's move on to the short interest in SoFi and what may actually trigger a squeeze in SoFi stock. Because short interest is starting to creep up in SoFi again. I mean, we're up over 15% now, and who knows where it's going to go in the future. But I'm going to be upfront with you guys right here. I could care less. 15%, 20%, 30%. I don't freaking care for two reasons. And I know that's four, but I meant two. The first is Wall Street can't bankrupt a company with great earnings. I don't care, short it to oblivion. I mean, they tried to short AMC into oblivion. They couldn't even do it with that company, and that company sucks. So, they just can't do anything, especially with a company like SoFi that's performing quarter after quarter after quarter. Sure, they can do and manipulate the stock price in the short term, but they can't bankrupt the stock. They can't do anything to it over the long run. And remember, as we've talked about before, once SoFi kind of turns that profitability knob and they start being profitable, institutional money, if I could talk, is going to start flowing into SoFi. And at that stage, it'll create that base to where it's going to just completely wreck all those short sellers, and they're going to get destroyed. I've never understood why people short sell in the first place. So it's just kind of one of those things. I don't know. It's something there, I guess, that appeals to a certain personality type. Who knows? I just don't understand it because the market's rigged to go up in the end anyways. And the way the game is laid out, people like institutional investors can come in and essentially render shorts completely useless, especially when you're talking about the long term, which is what I am. I'm a long-term buy and hold investor. Now for traders, totally different, but that's not what we're talking about here. We're talking about long-term buy and hold investing. And the second reason is it's not part of due diligence. I don't recall ever in all my studies on long-term buy and hold investing from all the greats, all the different systems out there, I don't ever remember anybody. Now, trading systems is totally different. I'm not talking about that. I'm talking about long-term buy and hold investing here. Nobody ever mentions, hey, check out that short interest and see what it's at. And if it's at this level, you shouldn't buy. And if it's at this level, you should buy. It's just not a part of fundamental analysis in any way, shape, or form for a long-term buy and hold investor. So I honestly never looked. The only reason why this came up was because it was a great discussion in our group about this and kind of how to understand it a little bit further. And kind of getting into the weeds a little bit as to what it means, what we're looking at, what historicals look like with SoFi, and a whole bunch of stuff like that. It was kind of all encompassed there. So it's a good discussion to have, but in the end, it's useless, it's worthless, and it's not something I pay a lick of attention to. If you're a trader, maybe matters to you depending upon your strategy, but for me, I could care less. But with that much short interest, there is the possibility of a squeeze. So let's kind of talk about what it takes to actually, or what it's going to take this time around to actually get a squeeze on SoFi, potentially get a squeeze on SoFi. And then let's also talk about why you might not want it. Right now, according to all our technical analysis gurus in the group there, that it looks like if we can get kind of up over $9.20 or so and kind of hold that line with SoFi, it potentially could trigger a squeeze up. Now, where it goes in that squeeze, nobody knows. When those things start running, all the algos jump in, everything kind of, all the options start going nuts. You just end up with a lot of chaos at that stage. So who knows where it goes? All I know is it means a massive run up in the stock. And of course, it's a fun ride, but it might not be a ride that you want to take. And it might not be what you want to have happen with a stock like SoFi. I already hear you now, Luke, that makes no sense. Why in the world wouldn't I want the stock to continue to march up higher? It is simply because the stock is still trader controlled in the end, and you have to understand what that means. And let's actually kind of back up a little bit here. Think about all the folks who weren't buying in the 4s, the 5s, the 6s, and 7s who love SoFi, or maybe they just got into the stock late. They weren't privy to it last year, so they're just now getting into the stock now this year, and they kind of hesitated to buy, waiting to see what happens, and then bam, the stock squeezes and it goes up. That creates a lot of FOMO, and a lot of folks pour into the stock on that squeeze, right? They're trying to buy it. Hey, it's going to the moon. I'm sure YouTubers will come out with pretty charts and graphs that show it's going to 20 and then 25 and then, wherever the heck they have it going next. I don't keep up with any of that sort of stuff. But the point being, there'll be a lot of FOMO around a squeeze event like that. And inevitably what happens with a trader controlled stock is the traders are going to do exactly what you expect. As soon as everybody starts FOMOing in, especially retail, we're always last to the slaughter per se. They're going to immediately start beating that stock down shortly after that event happens. So inevitably what happens is, especially the folks that FOMO in, immediately start to panic and start panic selling. And even if you didn't FOMO into the stock, it definitely will have such an abrupt fall that it makes you start questioning your investment. Like, hey, maybe I should take some profits right now and then try to get in lower. And you start playing all these other trading games and all this other stuff, or maybe you start questioning the investment yourself. And then of course you'll have all the same exact folks now coming in and giving you the doom and gloom and why SoFi is going to crater down to $4 again and all this other craziness like that. That is part of an unprofitable stock that is controlled by traders. It's not unusual. That is very, very much the norm. And you got to understand this is completely different than a meta situation like we had last year. Remember then, we just kind of got one squeeze after another after another. Sure, there was some profit taking, but it didn't just immediately crater back down to $80. It just continued marching up after squeeze after squeeze after squeeze with meta. So let me kind of illustrate this here with an example. If let's say the squeeze happens, we get up to 920, we manage to hold the line, we get the squeeze, let's say it goes to 12. I don't know where it's going. It's just I guess just to illustrate here. So let's say it goes up to 12. This is not the same as when Meta was at 80 something and it squeezed up over 100. And the reason why it's not the same as, a squeeze that basically gave you the same percentage return and everything else like that, the reason why it's so different is because at $12, in my opinion, I think SoFi would be a little bit overvalued. Now, not long term, but in the short term, I'd say that's a little bit overvalued for that. Meta at 120 or whatever the heck it rents to, 130, whatever the case was, is still significantly undervalued, and in my opinion, by more than $100, maybe even $200 undervalued. So that's a completely different scenario. And oh, by the way, Meta's also a stock that, one, it's undervalued, SoFi would be overvalued. The second piece of that is now institutional investors are going, wow, Meta's finally moving again, and it's significantly undervalued still. So that institutional money pours in, which is not going to happen to SoFi whenever it runs up to $12. So you have two completely different dynamics working there. Oh, and by the way, Meta's not controlled by traders. SoFi is 100% controlled by traders. So you kind of combine all those things and you see where a squeeze is actually very, very dangerous on your psyche, which the hardest part of investing is kind of getting the middle part right, correct? Controlling those emotions. It's really, really hard there. And it's completely different than a situation like a Meta situation where you had valuations so low. You had institutional buyers that were waiting to buy, Meta at that stage and were willing to come in and support the stock and to continue the squeezes up as it went through their, kind of the cycle back up to $300 or so. Remember, Meta was not controlled by traders. Sure, they were trading a lot of the short-term stuff, but in terms of the overall share base, it is not controlled by traders. Meta is amazingly profitable, even if you don't like them, I got it, but they're amazingly profitable. And I would also argue that Meta, when it hit its low, was significantly cheaper than SoFi is right now. So I'd say it's basically the equivalent to SoFi being like $1 or $2. Now, if we got a squeeze and SoFi was at $1 or $2 and it ran up to, $3, whatever the case was, I would say, yeah, there is more room for that. And I want to see that sort of squeeze happen at those levels. But seeing it go from $9.20 up to $12 is not even close to the same as Meta being down at those beatdown levels. So for now, a squeeze at these levels for SoFi is a lot harder to maintain. It just is, guys. It's going to be very, very hard. Not impossible, but extremely, extremely hard and not likely. So let's kind of see how all this goes. But remember, I could care less about that. It's just a topic we haven't talked about a lot. So I wanted to talk about it here with you guys, but I could care less. I'm not paying attention to it. I don't care. If I get it, great. If I don't, whatever. I don't care. I'm going to continue to stick to my plan and execute with SoFi. And if you want to jump in on discussions like these and be able to talk to me, in the DMs or talk to our group as a whole, we got a bunch of SoFi bulls who have just done so much research on SoFi. Man, they know more than maybe even the company knows in a lot of cases. Make sure you check out the pinned comment down there and see if a membership's right for you, where you can take 5 courses for free. You can have access to all those folks who are able to discuss SoFi on a very high level. You can use our stock analyzer tool for free. You can slide into my DMs. Just so much. Check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.